Right. Cool. So, just doing a bit of a sort of a recap of the week and a bit of a look forward as what sort of news is sort of coming out that might sort of be pushing the market. So, yeah, with that, we'll start off with the news. So, not an incredible amount of sort of news in that sort of put up for this week moving forward. So, I mean, last week was very quiet in terms of the amount of sort of news that we were sort of having come out, sort of like, after the week prior was just so like pretty much every tier one, tier two bit of news and that you could be having in one week, sort of popping out there. So coming into this week, look, it's a bit of a mixed bag. We've got a couple of bits and pieces on here, but yeah, so certainly starting the week off, it's looking reasonably sort of quiet and nothing that's sort of affecting things too much. Certainly not on the Monday. The whole roster looks pretty quiet there. Come Wednesday morning though, CPI. This is going to be a pretty big one, I'd say, for the US here, because I mean they're really up in the air at the moment. Like there was just so much talk for a long time about sort of rate cuts. They're coming in March, all this kind of stuff. This is like the last little chance. I would say pretty much there's about a 99 percent chance that they're not going to get the rate cut in March, and I only don't say 100% because I don't like dealing in absolutes. But realistically, you had a slight uptick with CPI. You got strong US data as a whole. There's not a lot of sort of key indicators there, sort of saying that yes, okay, they need to get that. They need to sort of cut the rates to sort of like avoid recession or sort of stimulate the economy, or you know what I mean. Certainly not with sort of, as I said, last CPI sort of coming up a little bit. So where are we at here? CPI last one there. So this will show us last month's print. Yeah, I mean, as you can see, it's sort of flatlining around this area, but certainly ticking up on the last print. And I mean, if this goes up again, well, obviously that's starting to see a sort of increase and a sort of drive up with it. So again, there's zero chance that they're going to be sort of cutting it, excuse me, sort of while rates are sort of moving in the other direction. Forecast is still quite a substantial drop back off actually. So let me just go back to this one. So 2.9 previously, and then sort of obviously we jumped up to 3.4. So yeah, if we sort of get around the 2.9, that's going to strengthen the argument for sort of cuts sooner rather than later. You're probably going to see a little bit of sort of US dollar weakness, which I'll jump on to DXY in a moment. That could be something that sort of pushes them to have a little bit more of a sort of cooling off. We are coming into that sort of fifth leg or fifth wave of this sort of push up from the lows with US dollar, and at the moment, look, it's just basically going into another little consolidation. So as I say, I'll get onto the charts in a moment with that one. But so CPI is going to be the big one coming sort of, and that's also Wednesday. So we've got a Claremont count for if you're following the pound and that on the Tuesday. But again, Monday, Tuesday, fairly quiet, particularly for what we trade. Then we got sort of Thursday, we've got Aussie unemployment numbers coming out. Now, if you remember, we had a massive miss. The numbers here have been all over the place. So 79 minus, what's 82? No, minus 57 or something like this, minus 61, so 65 here. So expecting a bit of a tick back up into the range. I should be able to see a bit better here. Yeah, here we go. So here we go. So revised, so 42 expected a slowdown to 10, blew out the top side at 61. Then so revised up to 72, expecting slowdown. Like pretty much was gave every single one of these jobs over. Whether these people got sort of kicked out of their jobs in like one month or something. But I know this is actually sort of added to the thing, but so it's less added. But it's really like they are way off the mark. I mean, if you look at these forecasts here, you've got an average of sort of like maybe high teens, around 20 or so. And you're getting 64, 55, 66, negative 65. They're way off the mark with all these sort of things. So look, I mean, who knows what will be happening with it? I would say you probably will start to get something back in line with these sort of marks with the 20,000, 15,000, these kind of things. But again, it's sort of I mean, you just don't know with Aussie data at the moment. It is very weak with it all. But if we do get a sort of tick up, then obviously that shows that sort of companies are sort of okay with the amount of rates that are happening. They're still employing people. They're sort of it strengthens the argument for a little bit of Aussie strength. You want some strong supportive data coming out, and that's the thing. Aussie has just been so weak, coupled with the fact that USD has been running against the majors across the board. It's been a double whack for the Aussie, and the Aussie is just, what are we at, 6 weeks into the year, and it's already given up like sort of 5% or something. So yeah, that's been a shocking start to the Aussie. So it needs to start to see a little bit of a strengthening of these numbers as well, and obviously sort of 3.9 to 4% with the unemployment rate. And again, I think sort of the target, I'm not sure what the target is actually for the unemployment rate, but certainly I think they expect this to sort of move up a little bit higher as well. Just sort of like, with the raising of the rates as well. Moving on, sort of Friday, the rest of Thursday don't really have anything too much of note. We got Lagarde speaks, but late on Thursday night / Friday morning, we got a whack of US data coming out here as well. We got Empire State, we got retail, and just the normal sort of unemployment claims. Unemployment claims have been pretty quiet recently, so nothing too much to sort of note of there. Retail sales, expecting a little bit of a slowdown here. So we'll sort of see how much that is actually have an impact in that. You get a high number there. I think a high number. It's a bit hard to sort of say at the moment because data, like, if good data can be good, given one sort of like set of sort of economic circumstances, and then seemingly good data can actually have a negative impact, just given a different sort of scenario. So it really sort of depends sort of what they're trying to do. Obviously, they're looking at sort of cutting the rates and not looking to hike the rates in that at the moment. So, we want to sort of see what they're doing with the retail sales. So, when people are spending and spending and spending and spending and the sort of, retail sales are going up, well, they're obviously sort of, that's what's adding to inflation. So you want to see a higher number to strengthen the US dollar, because basically what it means is that they're trying to use their tools, and by their tools is like they raise their rates to slow down the spending, to slow down the retail spending. And if people are still spending, well, it's obviously not having the desired effect. So that gives the argument to, at a certain time raise rates, but at this point in time hold rates for higher for longer, i.e., not cut. So yeah, it's interesting to sort of see what that'll sort of have sort of coming out there. So I'd say sort of, as I said, if that's a weaker number, then it is having its sort of desired effect. Again, you don't want to go too far down the other side because you don't want to slow things down too much. But the lower that these numbers are, the more inclined you would feel that the Fed are to go, okay, we might need to spur on, the retail side of things as well, just so we don't, not that the retail sort of will define a recession, but early indicator, that kind of thing for it all. So low number there, I would expect to sort of see a little bit, again, a bit of US weakness. Strong number, I think that'll sort of firm up the US dollar a little bit. And obviously core retail sales there, and then manufacturing and Empire Manufacturing Index. We're seeing, obviously quite weak numbers here, expecting still a tick up. So in line with a lot of the US data that we've seen recently, which has been pretty strong data, like comparatively to the other economies around the world. Expecting a tick up, but still, again, not getting up above zero at the moment. So hard to sort of see how that plays out. I'm not, don't really have too much of a comment on what you're going to see with this. Again, I think basically, the higher the number, stronger the economy, the more that they're sort of going, okay, we don't need to give them a helping hand. If we see a low number, then obviously, well, you're probably going to have to sort of see them go down the path of thought that we need to stimulate the economy a little bit, i.e., lowering rates, more people borrow, they sort of put it into manufacturing, it pushes on the manufacturing sector. That's the thought with it all. So yeah, we'll see how that one sort of plays out. And then sort of Saturday morning, Friday night / sort of thing, we got PPI and sort of building permits for the US, and they're looking to be sort of relatively flat, kind of bits of data in that to sort of finish the week off. It was actually quite strange. We didn't have any US data sort of on the end of Friday last week, so it was a little bit of a sort of a quieter one. I had a bit of a move around, which I'll jump onto the charts in a moment, but you don't often sort of get a pretty quiet sort of Friday night. So having a look at sort of US dollar, so this is DXY, we're seeing it, if we jump onto the daily, this is pretty much sort of what I was sort of feeling. We were going to level up, consolidate, and then I thought as we come out the top side here, basically here we go. We could just sort of consolidate along the bottom here. Sorry, consolidate through this whole sort of range here as well. We did see it sort of come off a little bit from this top here. Got almost up to that 61%. We came up to this sort of seemingly underside of this other zone, which is quite interesting. And obviously these previous highs here swiftly sort of knocked back down. It has had its second attempt up. That also got knocked down. So really, I guess basically, this is a heavy sort of horizontal sort of resistance. So you want to see a close out the top side here. I don't think I'm going to be seeing this coming too soon. Depends on the data this week. And realistically, there's a good chance that we just continue to sort of range through here. So I think Monday will be a good sort of telling sort of session. We are seeing sort of a little bit of a negative divergence, but it tried to push back up here, as you can see. It tried to have its second effort on that sort of third day of the pullback. It got reasonably sort of knocked down, and it came obviously up to that body fill, and then sort of came back down, but it's forcing this to still really come in with a little bit of a negative divergence up to that area there. But we did see it sort of tick up a little bit, so I would say not enough to sort of say that, okay, there's a big negative divergence. But the idea is that you probably see a little bit of this action through here. If we do sort of get a close down out the bottom side here, we've got the first point of call will be like this candle down here, retest of the lower range, resistance, resistance all the way through here, come up here, test it for support. We could see a big push back up to the top side over here. So these things, I mean, they don't happen just by chance and at a random time. You probably see a little bit of a drift and then maybe coming into bits of the news data coming out, and then sort of once we see a little bit of that sort of the US CPI coming out, maybe a little bit of a drift through Monday, Tuesday. I wouldn't imagine any large breaks prior to CPI, but I would imagine that sort of potentially that could be a driver to get us either moving down or really sort of elevate it and sort of hold it up in this top area over here. But as I said, I find it hard to sort of find a reason that they're about to sort of cut the rates. But certainly if CPI comes down, like well into excuse me, they're predicting 2.9 as we just saw, but if it comes down lower than 2.9, that could be the catalyst to sort of like go, okay, well, they are coming, because that's the thing, like, the rate cuts are coming. The rate hikes, that's off the table. Now, higher for longer, that kind of thing, it's been around for a while. It's really how long are we going to hold it at these levels before we sort of, actually do inevitably cut. And I think they sort of find some sort of equilibrium in the market. So yeah, I'm not expecting a great deal with US dollar in that sort of prior to the CPI, and then I think maybe we could be seeing using the CPI, and I would say maybe a couple of other bits of those news in that, but really the CPI is a bit of a catalyst to sort of get things moving. But I think we've got 1, 2, 3, 4, 5. So this could be just a little ABC. As I said, I'm not a big Elliott wave person, but I do get the concept of the 5 waves here. If we get the 1, 2, 3, maybe that'll sort of give you the shunt, a little bit of a sort of cooling off before it goes right up to the next levels, or maybe that'll give us a bit of a roll down over here. I know it's pretty much sort of covering all bases, so it could do this, could do that. But at the moment, as you see, this year has just been really just not giving a lot away. Like, yes, it's moving in a sort of positive direction, but you've got to remember, where are we actually coming? And, we did have a big push down here. Yes, we come up quite strongly, but, are we going to see a rollback to these lower sides over here? Well, that's still yet to be seen with it all. I am still sort of believing that we are going to get a bit of a pushback down here. May take another month or two. I don't think we're going to be going back up and retesting the top, but of course, if we get the right data, and they sort of go really sort of quite firm and quite sort of hawkish, who knows how high they want to take it up. We can definitely I'll start to clean up a couple of these charts through here. I do like how it sort of tells a story through the way through, but yeah, occasionally it can get a little bit more difficult to read. All right, so flip on to gold, because gold's really, again, it's just trying to hang in there, but it's not giving a lot of confidence for anybody looking for upside moves here. And we did see a push down to this sort of 20 support area, nice bounce back up there through on the Thursday, but of course, bang, closing the week out fairly, I mean, it's not negative, completely bearish, but it's certainly not looking like, oh, here we go, pushing to the top side here. I think really it's just been such a sort of scrappy back and forth. I mean, you have a chart going for a while. Let's just get some of these out of the way, and then we can have a bit of a better look at what levels we're looking at here. Let's clear these up. Yeah, so I mean, if you look at this, this is from so start of the year of where are we? January. So this is the start of the year here now. So we are still technically down from start of the year, but as you can see, it's not really, you're not sort of going, okay, it's moving like this. It's moving like this, and then like this. Tries to go up, tries to go down, but more or less really just sideways. So, again, above 2000, I think it's still all right. We're gonna get all these ones off here. Yeah, above 2000, I think it's still looking like, bulls will want to give it a shot, see what's happening. There's a bit of data and news, or data, a bit of news out through the week. I think it was like 15th month in a row or something that China is also sort of increased its sort of gold holdings. So, that's interesting as to sort of how it plays out to this. Well, that's still yet to be seen, but 20 is a bit of a limit we're looking for here. If we look for a short term, probably seeing something potentially sort of forming through here. Yeah. Look, again, I'm not sort of super fan with these sort of things here. I think, like, it does look like it wants to sort of come back down here and test these lower levels, to be honest. I think sort of if we can sort of get above, again, look, 40 has seemed to be a sort of reoccurring figure through the last couple of weeks. So, that's pretty much where I'm going to be sort of looking for a close above. If we can sort of get a close above 40, then I think we're done with this. Well, done with this a little bit here. Going up and at least sort of test for these wicks up the top over here. But for now, again, 40 to 20 seems to be the sort of little battleground. If we break down below these wicks down here, below 15, I think sort of, you've got to really consider 2000 as an acceptable sort of target. Again, look, we've only given a one touch up. If we come back down here, there could be a bounce, but as we do that, we see the seller sort of pushing further down each level. So then, it means instead of looking to get above 40, now we'll sort of be looking, okay, first point of call, we're looking to get above 20. But at the moment, it does look like we're kind of sort of pushing a little bit to the downside here. If we were to sort of drag something out like this, again, this isn't really based off anything other than sort of that may be a bit of a direction we're going there. But I've given this one too many shots and it seems to just be ignoring that line. So I think that it could be a nice little sort of a little bit of a channel. So coming down here, it gives us some areas where we could be looking if it does come under sort of under 2000. That 1980 was a super strong level. We could see even previously after that sort of all-time high, came back down, that zone held there. We know that it's a super strong level from last year as well. So you break 2000, 1980 is the sort of point of call. You want to short it, you got a 20 buck move to the downside here. You want to get long, you're going to see a bounce from around this area here. So you hold off on adding to your longs till you get down to this 80s area, and then see if you can get a bit of a springboard to sort of shoot back to the top side there and sort of continue a bit of a channel. But for now, I would say sort of 20 to 40 in that sort of through the start of the week. CPI, US CPI is going to be the catalyst to push it. Aussie. Had a somewhat bullish close to the week, just on the day. I mean, you can see it's really sort of tightening up a little bit here. All right, back at it. Yeah, so Aussie, look, I mean, this was what I was saying before. It has just been absolutely bashed through this year. And again, it was just, so it's getting quite a sort of scrappy looking chart here. So, we've got this little slightly higher low on the daily. Which it did sort of try to hold this sort of 19, stuck on the golds there, 64.80 level, where we sort of saw it sort of bounce back up to the top side here. It's not enough to sort of call it okay that it's actually done with this area here. We can see it's sort of like, it's going through the week. If we get down into the lower time frame, there was that little head and shoulders. It was quite a nice little sort of defined head and shoulders here. Broke out, came through, tried to hold a flag, and then just bang, smack back down. So, yeah, that was a bit of a disappointing trade sort of going through there. But we are sort of starting to see, as I said, look, here's your lows, here's your previous lows. We have seen a little bit of a higher low on that second push down. Not enough to say that it's rejected and pushed out. but it is something, you know what I mean? Instead of having this kind of meltdown kind of thing here, we are seeing the buyers step back in, and this is just indecision throughout the week. I mean, if we put it onto a weekly, we can see that we did somewhat sort of close bullish, well, bullish for that candle for the week. But after 1, 2, 3, 4, 5, it being the sixth week of selling down, you can't really get too excited to have a sort of a slight bullish candle by like sort of 15 points. So yeah, we'll see how we go. The RSI is still sort of pointing to the downside here. So I've given a weekly, I could still see a little bit more sort of happening coming down here. But if we actually get onto the daily, I wouldn't be surprised if we could potentially see a little bit of a pushback up just to at least retest this underside here of 65.50. Really, it still remains of sort of like, 66.30, and then the big one for this is 67.30, 67.40, that kind of area, to sort of see, if you're ever going to see some sort of whatever, but when you're going to see some topside moves here. We did see this little negative divergence that we sort of pulled out through the week. So, this is on the daily, so you want the negative divergence on the daily, but this is an early indicator. Well, early indicator, you got to take a little bit of a gamble with it, but you still need to see the confirmation. The confirmation is to be really getting above this next sort of falling resistance here, getting back up into this zone over here above 66 where we had the NFP news drop off. So it's really been lagging quite hard. I did notice this as well on the 4 hour. If you look at this, how just in the comparison, because there's certain currencies that are obviously sort of run kind of in unison, and one with Aussie is with the New Zealand dollar. So I did notice this, so this is with the Aussie where we've had the drop down. So bear with me one sec. And where we go? New Zealand here. So as you can see, sort of New Zealand dollar, how well it sort of recovered in comparison to Aussie dollar against the US. Like this is where NFP sort of dropped, and obviously we got smacked down, and it's just sort of waddled around the lows here. Well, this is sort of New Zealand dollar. It got smacked down as well. Like as I said, there's so much liquidity came into the market, really sold down hard, heavy, but it's pretty much undone that move now. Where's Aussie? Aussie's at like what, 38% or something coming through here. I think maybe a little bit above us. We kissed the 50%. Yeah, as you can see, we kissed the 50% and then sort of sold back down a second time. These guys sold back down, hit the 61, sold back down, but obviously sort of rallied a little bit higher. They put in their high low. They put in their high low equivalent of around here, and then bang, they've gone up and they've undone this move here. So New Zealand's an interesting one to watch at the moment, just because as you see here, we do have a bit of a falling resistance on the 4 hour, and it was enough to sort of push it through. Sort of coming into Friday session, it kind of didn't really do much through Friday, but we have sort of come out of that falling resistance. We're coming into this sort of horizontal sell area here. So, push above this, is obviously going to be quite bullish, and we could see that as well with a little bit of a flow on with the Aussie dollar as well, moving forward. And just next, we will tick onto copper. Copper, what a shocker. If you've been watching my sort of vids and that, sort of, I was like, okay, coming through here, we got the potential sort of a head and shoulders move coming up through here, and I was like, look, if I think it was around this point here, we saw the break of this falling resistance. It came through, back test, came up. It was charting beautifully. There was a 4 hour move up the top here. I said, look, we got to hold this top line here with the back test. If we don't, we're going to come down. We came down. I tried to sort of position myself for longs here. I really didn't think it was going to come down this far with it all. Like it has absolutely been just smashed. And even as you can see, sort of where I sort of had that neckline coming through there, it just got hammered. We are sort of seeing again, look, coming into the end of the week, a little bit of a push up, but again, you can't be too pumped about this thing till you back up above this little alert that we've got sitting on here. It's sort of 3,820. Then we might sort of see that, you might sort of go for a little bit more of a range play, just with a little sort of fake out down here. But yeah, we had the underside of this sort of rising support. It clipped up here. It was a horizontal. We knew the horizontal sellers and that was sitting there as well. And I think it's sort of, I can't remember, I heard some stat, but it was like its worst week in, I don't know, some time. but it was pretty bad. So I know we got this one moving here. But yeah, in terms of a weekly, that is just rocked down. So yeah, we're not really seeing much happening with the RSI there. So yeah, we got to see that sort of thing turn around a little bit. A lot of that is also predicated on China. Yeah, back in. Yeah, so it really comes down to China. Like, I think sort of, I want to sort of see that the China side of things is actually sort of recovering a little bit because, they're sort of like, I don't know if are they still retaining the manufacturer of the world. I know that a lot of the companies are sort of, ever since they sort of moved um, a lot of the people out of the sort of the low income into the middle income, that sort of middle income trap they call it, sort of where sort of like you can't actually sort of produce your things for as dirt cheap as you could previously. So people are sort of looking for other areas like India. They've been looking for India for a long time because they've got the manpower and that. But you've got I think Cambodia was one of them, or sort of those Southeast Asian countries. So there's a lot of drive for those places, but still, China is the kind of number one economy you want to sort of see moving if we're going to sort of see the manufacturing side of things and that sort of kicking up as well. And they've been lagging. I mean, if you look at their market, it's been absolutely demolished. It's on like just incredible lows. When you compare it, I saw a chart as well the other day where it was sort of, China stocks against the like sort of how they've been sort of running in the last couple of months against sort of like Western stocks. And we're pushing up against all-time highs. They're pushing up at sort of like all-time, well, maybe an all-time lows, I don't know, but certainly low lows. So yeah, so a little bit of a kickback this week with them. So let's see if I've got the chart for it. No, I'll organise a chart that sort of through the week, and so I can sort of talk a bit more on that one. But yeah, we just sort of you've got to see them sort of kick back to life a little bit more. If we can't see that recover, then unfortunately I think copper is going to stay under pressure for a little while longer, and we could be sort of seeing these 355 levels get a touch up. Certainly that measured move, if that was a head and shoulders, it's not a perfect head and shoulders really when you look at it, particularly just on the weekly. Um, but this could have been very much a bit of a head and shoulders here. We'll have to sort of see how it sort of if it commits to the downside here, then these are definitely some price levels we could be looking for. If not, then it could push back up, and as I said, we could see a bit of a continued range through here. I think US sort of strengthening up and the sort of rate cuts pushing off a little bit as well. That's also had an effect on it. So I think sort of if we do see that progress a little bit more, because obviously if you look at this as it was sort of the rate cut talk was on, obviously it was sort of pushing up a little bit more, and then as soon as we turned around, we hear Powell's talk and all this kind of stuff, we start to see continued sell-offs here as well. So there's a couple of factors sort of moving sort of copper at the moment, but you want to see that confidence pushing up. And speaking of China, we sort of finish on this one here. It's grinding. It's you know what I mean. I've obviously been sort of quite sort of a sort of negative outlook person on this pair, but you can't deny that it does look like it's wanting to sort of break high here. So we're going to have to see how this sort of plays out. But certainly, if we sort of get across this what sort of three, basically the highs, the first breakout highs here, I think we could see another leg to the top side here. If we do this, something along these lines here. How would this look? Yeah, could potentially. I'm not a big fan of this, particularly with this sort of stuttering around here. But if you were to see a bit of a measured move around here, you may sort of see something along these lines. But as I said, again, I'm not a big fan of this sort of move. But again, these are just looking for targets. If it does sort of happen that we get the breakout and we go above sort of 724, as I said, the big sort of head and shoulders is what I've been looking to sort of play out. I thought it may have sort of failed and just broken down sooner, but again, if we see that sort of strengthening up and pushing through to the top side, that could be sort of where they are sort of taking this pair. Again, look, it's hard to sort of say anything too sort of bearish on this at the moment. I mean, we are sort of coming down off a sort of off that long grind, but it has been sort of slowly bouncing back. As hard as it gets hit down, it's just springing back to life. So, if we take out, we need to take out the highs. That's the thing. If you don't take out the highs and you sort of start to just drift along sideways here, then we could start to see a bit of a failed effort, and a failed effort will result in a pushback down to the bottom side here. But certainly I'll be setting my alerts for these ones here to sort of say, look, China is breaking higher. Well, obviously it's in China, well, not China breaking higher, but that's what I call this pair, China. And it would be a weakening of the yuan and US dollar, sort of pushing up through there as well. All right, boom, that's about it from me.